Hello, good morning. So, today our topic is budget and budgetary control. So, what does it mean? If you remember, we discussed earlier that there are three stages, three elements we will cover in this course. The first one is the cost recording, where we will understand how to record material cost, labor cost and overhead cost. The second part is the decision making by the managers using the cost data, where we already covered the CVP analysis, the marginal costing techniques, the relevant cost concept, etc. And the third part is the management and control, that is when we take a decision on the basis of the cost data, we need to review, we need to keep a control over it, we need to see that whether our decisions are going on the right path or we need some modification, we need to make some changes for improvement of our performance. So, there are two techniques we will discuss in this course. First one is the budgeting and second one is the standard costing. So, today our topic for discussion is the budgetary control. Now, what is budget? So, budget is when we plan something, right, it is a futuristic tool. When we plan something, we must understand that how much expenses are going to be made, how much income we can expect out of those activities, and accordingly we can plan our resources. So, like I am giving one example, suppose when there is any function in our house, so what do? We make a budget that how many invitees, what was the cost of food, what was the cost of decoration, and then we made an estimate that what would be the total cost of that event. And then we we make a plan that from where the funding will come. If the total budget is say 20 lakhs, then from where this 20 lakh will come. So, we need to take it from by liquidating our investments we can do, or we can take short term personal loan also, some people borrow also for the events. So, we need to make a plan such that, and when we are doing that, actually what is the basic underlying motive? The basic underlying motive is keeping a tab, keeping a control over the expenditures, right. Same thing applies to the company also. When the company manufactures, right, a product, right, ultimately he needs to keep a control over the cost. He must have some idea that from this production and sell, how much money he can receive, how much revenue he can generate, right. So, this idea is very, very important. So, it is a budgeting is a very, very important tool as far as the control of the cost elements are concerned. So, we will understand the different types of budgets, what are the basic tools based on their flexibility, based on their function, based on their timing, right. And we will also see few examples that how to compute the and construct a budget. So, let us start. So, introduction, what is a budget? Budget is a formal plan of action expressed in monetary terms. It could be seen as a statement of expected income and expenses under certain anticipated operating conditions. So, as I said earlier, it is a futuristic statement, right. So, it is an expectation that how much cost is going to be generated, how much income I can earn out of that, right. It is a kind of quantitative blueprint for the future, and when the time is over, what we do is we compare these budgeted figures with the actual figures and see whether there is a variance. In normal circumstances, usually the budgeted figures and the actual figures, they never match in toto, but we have to see that if the variance is within the manageable limit or it is beyond the manageable limit. Every organization achieves its purposes by coordinating different activities. For the execution of goals, efficient planning of these activities is very important. and that is why management has a crucial role to play in drawing out the plans for its business. Various activities within a company should be synchronized by the preparation of plans of actions for future periods. These comprehensive plans are usually referred as budgets. So, budget is actually basically a futuristic plan about the future. It gives us an idea that what is lying ahead, right. It gives that it is an exercise which is essential to do, because the future is uncertain. We do not know what is going to happen in future, but if we have a plan, then it is easier to handle those uncertainties. So, meaning and definition, budget according to SEMA. What is the definition of budget according to Chartered Institute of Management Accountants? A budget is a plan qualified in monetary terms, prepared and approved prior to a defined period of time, usually showing planned income to be generated and the expenditure to be incurred during the period and the capital to be employed to attain a given objective. So, this is the definition of budget given by SEMA. In the view of Keller and Ferreira, a budget is a plan of action to achieve stated objectives based on predetermined series of related assumptions. There are other definitions also, but primarily what is coming out, what is the basic characteristics of a budget is, it is a futuristic plan. So, while preparing the plan, the management thinks of what is expected in future, what is the level of sales I am expecting from the future, what is the level of expenses I am expecting from the future, is there any possibility of any any event, right, maybe favorable or unfavorable, which we should account for while doing the budget. And once the budget is ready, accordingly we can make the other arrangements. We can make arrangement for the funds, we can make arrangement for the resources, so that the future becomes smoother and it should not come up with some surprise, right. So, one can elicit the explicit characteristics. What are the major characteristics of budget? It is mainly a forecasting and controlling device. It is prepared in advance before the actual operation of the company or project. It is in connection with definite future period. Mostly in industry, the budget exercise happens in annual, right, and then it is broken up into say half yearly, quarterly or monthly basis. It is a connection of definite future period. Before implementation, it is to be approved by the management. So, what happens while in practice, when the budget is been prepared, all the major stakeholders are consulted with, like for example, the factory people, the engineers, they were consulted, the sales people, those people who has the actually the sense of the market movements, right, they can have who knows the nerve of the market. So, those people, and then finance people, because ultimately they have to arrange for the funds. So, all the major stakeholders, right, employee bodies, right. So, all the major stakeholders, they are being consulted, right, and their opinion is being collected and taken together, and then the top management goes through it and ultimately fine tune and prepare the budget. It also shows capital to be employed to the period. So, as I said that it is actually a very comprehensive exercise, right. So, because ultimately if I start with the sales budget, right, if I start with the sales budget. So, how I can do that? I can talk to the sales people, I can try to assess that future demand. So, forthcoming demand for the next 1 year, the forthcoming year, and then with that I can further plan that if I have to make this amount of sales, whether I should have the production capacity is there or not. So, I need to make a production budget. If I am lacking in production capacity, I need to think of how to increase my production. Should I increase my production manufacturing capacity, or should I outsource it? A part I manufacture, part I give it to someone else to manufacture. So, I will make a production budget. Once the production budget is ready, then I need to think of that two major elements, right, of production, the manpower and the material. Do I have adequate supply of it? If I have less manpower, do I need to recruit more people? What kind of people I need to recruit? Should they be skilled manpower or unskilled manpower is sufficient? Whether there is adequate supply of manpower is there in the market or not, right? For material, from where the raw material will come, so then I need to enter into contract with different raw material suppliers, right? So, all these plannings need to be done. Now, when I will do this, of course, if suppose if I need to increase the production capacity, then I need more working capital. So, this working capital means I need more cash, right? From where this cash will come, so that I need to define, okay. So, cash, if the company has enough cash balance, enough reserve, that is fine. If it is not there, then I need to talk to the banks, right, ask for more borrowings, maybe short term borrowings, right. So, all these kinds of plannings, they are interrelated altogether, right. So, sales budget, production budget, raw material budget, labor budget, overheads budget, sales, cash budget. So, all this, budgets, they are interlinked, and when this exercise happens, it gives more clarity to the management that what is lying ahead, which is very necessary for successfully running the business. So, that is why budget is so important for any company, for any industry. Okay. The next item is budgetary control. What is budgetary control? Budgetary control is a method of managing costs through preparation of budgets. Budgeting is thus only a part of budgetary control. The SEMA's definition is budgetary control is the establishment of budgets relating to responsibilities of executives of a policy and the continuous comparison of the actual with the budgeted results, either to secure by individual action the objective of the policy or provide a basis for its revision. So, you prepared the budget, now you put a budgetary control in place. So, number one is, what are the major features? First one is establishment of budgets for each purpose of the business. Number two, revision of budget in view of changes in conditions. Number three, comparison of actual performances with the budget on the continuous basis. Number four, taking suitable remedial action wherever necessary. Analysis of variations of actual performance from that of the budgeted performance to know the reasons thereof. So, these are the main 5 features of budgetary control. What is the objective of budgetary control? The first major objective of budgetary control is planning, right? It is a part of plan. So, any activity, if it is planned in a meticulous way at an earlier stage, that makes the job smoother. So, planning is the design of a desired future position for an entity, and it rests on the belief that the future position can be attained by uninterrupted management action. So, if the planning is good, then the expectation is that the future hindrances will be lower, right. Budget is an excellent tool for planning purposes, for planning the futures. So, as I said earlier, so detailed plan related to production, sales, material, labor, funding, capital needs, right, they are drawn out, right, and by planning many problems estimated long before they arise and the solution can be thought of. As I said that as a manager, we would like to avoid nasty surprises, right. So, to avoid nasty surprises, the very effective tool is the budgetary control. Coordination. So, while preparing the budget, all stakeholders are consulted. The sales team was consulted, the production team was consulted, the finance team was consulted, the HR team was consulted, the operations team was consulted. So, all the major stakeholders, the employees were consulted. So, all the major stakeholders, they were consulted and coordinated, so that they can put their view right all together, and the budget, the outcome of this process is a good foresightful budget, and it helps the company in planning the future, right. That is the ultimate objective. So, budgeting plays a significant role in establishing and maintaining coordination. Budgeting assists managers in coordinating with their efforts, so that problems of the business are solved in harmony with the objective of its divisions. Efficient planning and business contribute a lot in achieving the targets. Lack of contribution can create problem, right. Okay. Number 3 is measurement of success. So, the budget has been prepared, right. Budget is for the future. The actual performance happened. Then the next stage is that the management will compare what was in the budget and what is actual, right. What was in the budget and what is actual. So, it also, when we compare, it gives us an idea that whether the this actual output is matching with the budget, it is better than the budget or worse than the budget. So, it is an effective tool for measurement of success also, right. Without a budget, it is very difficult to see in future whether my actual performance is good or bad or fair, right. But when the budget is there, it plays the role of a benchmark, right. And then I can compare the actual and see that whether I have done well or I have done worse, I have scope for improvement, or it is so-so, it can carry on. Motivation. So, motivation budget also, it is considered as an useful tool for encouraging managers to complete things in time. When you have a benchmark, right, when you have a target which is foreseeable target and which is an achievable target, right. So, when you have a foreseeable and achievable target, it helps the managers to work for achieving a tangible target. If there is no target, if I can't see what I have to achieve, what is my future, it is difficult to work, right. So, in that sense, it is a useful tool for encouraging managers to complete things in line with the business's objectives. As the budget is prepared by the management, they are always in sync with the ultimate objective of the business, fine. So, it helps there the managers. So, managers know this is my objective, the budget is prepared according to the objective. So, this is what I have to do and I have to achieve within a given time frame, right. So, it makes the working of the performance of the workforce, performance of the company, it is much more smoother, much more better. Control is, it is essential to make sure that plans and objectives laid down in budget is being achieved. As I said earlier, it is a control tool. So, once the budget is there, that means what is the underlying message? Underlying message is this is your target, right, and you have to achieve this. So, suppose if there is a cost limit, so what the management is telling the managers that see this is your limit, whatever you have to do within that limit. When I am preparing a sales budget and creating a expected income, so it is a message to the sales team, see we are expecting this much sales, right, and this is the thing you have to achieve within this time frame, say 1 year. So, if anything goes less than that, then sales team has to answer, and if it is better than that, then of course it is better, right, okay, fine. The next item is advantages of budgetary control. What are the advantages? So, there are numerous advantages, several advantages of budgetary control. Number 1, the system provides basic policies for initiatives. It enables the management to perform business in the most professional manner, because budgets are prepared to get the optimum use of resources and objectives framed. It ensures teamwork and thus encourages the spirit of support and mutual understanding among the staff. It increases production efficiency. eliminates waste and controls the cost. It shows the management where action is needed to remedy a position. Budgeting also aids in obtaining bank credit. It reviews the present situation and pinpoints the changes which are necessary. With its help, tasks such as planning, coordination and control happen effectively and efficiently, and it involves an advanced planning which is looked upon by support of many credit agencies, so all the stakeholders, right. When a budget is prepared, right, the major benefit is what? Major benefit is that the team, right, it gets an objective, a target, right. They can now see what is expected from them, what needs to be achieved, right, and they can work in sync with the objective of the firm, right. So, that is the major benefit of advantage of budgetary control. There are of course some disadvantages also. What are the limitations or disadvantages? It brings in rigidity, it gives less flexibility, right. So, suppose if anything goes beyond the budget, it requires explanation, which may put some hindrance in flexibility and sometimes in creativity also, because many things you may not be able to foresee beforehand. When you are working on it, you may get some new idea, right, you may look for trying some new idea, but if there is a strict budget, right, it may be difficult to adjust there. So, it tends to bring about rigidity in operation, which is harmful. As budget estimates are quantitative expression of all relevant data, there is a tendency to attach some sort of rigidity or finality to them, right. It is being expensive beyond the capacity of small undertakings. Budgeting exercise actually requires a lot of time, effort and brainstorming. So, it is a costly affair. Budgeting control cannot take the position of management, but it is only an instrument. So, sometimes when a budget is prepared, right, it is not like something which is written on the stone, right. There should be some flexibility should be allowed in the budget, even in the midway, because today the business environment is so dynamic. So, I do not know that what is going to happen in next quarter or after 6 months, right. Sometimes it becomes quite difficult to foresee what is coming. Somewhere some war happened, right, some economic problem comes up, some political problem arises. So, these things are there. Because of this, a budget which is too rigid, right, it is not desirable. It sometimes leads to produce conflicts among the managers, as each of them tries to take credit to achieve the budget targets. Simple preparation of budget will not ensure its proper implementation. If it is not implemented properly, it will lower the morale. The installation and function of budgetary control system is a costly affair, as it requires employing the specialized staff and involves other expenditure which small companies may find it difficult to incur. So, as I said that it is because it involves so many teams, right. It involves operations team, it involves marketing team, it involves finance team. So, it involves so many teams, lot of meetings and data collection, lot of data collection is required. So, this makes it quite cumbersome exercise. This is not something, and also there is another issue. So, if we compromise on these things at the time of preparation of budget, the ultimate objective of this entire exercise may get hampered, right. We need to devote lot of resources and energy into preparing it, making it successful. So, that is why it is costlier. So, the smaller companies, it is difficult, right. Nowadays what happens, the data collection happens through ERP or different technological platforms. These technological platforms, they involve cost, they are not free, right. Sometimes this cost is quite substantial. So, for a smaller company, it is difficult to achieve, right. So, but none of the, despite of these limitations, budgeting is a very useful tool, right, for planning purposes, and it is a time tested tool, right, which is for years the companies are using for management control and performance evaluation. Okay. What are the essentials of the effective budgeting, right? For making a budgeting exercise successful, there are some elements to be present, right? So, first one is support of top management. This budgeting exercise cannot be successful if it does not have support from the top management, because it requires sincere involvement of all major departments, sales and marketing, production team, the finance team, HR team, everyone's sincere and honest participation is required. So, it must have backing from the top management. It requires teamwork, right? It requires teamwork because everyone needs to work together, right, for making it successful. Realistic objective, as I said, that it is a kind of benchmark, but the benchmark should be realistic. If it is not realistic, it is very difficult to achieve it. Excellent reporting system, right? Because it involves a lot of data collection, right? So, the data is collected from different stakeholders, right? And this data should be clean and reliable. For that, to make it clean and reliable, there must be excellent reporting system. Structure of budget team. So, there should be a budget team which coordinates with the different departments, collect the data, do the forecasting, etc. There must be, now this budget preparation, it is linked with the business objective, the business policies of the establishment, right. The business objective can be different for different companies. Some company may have the objective of increasing the market share, right, play on the volumes. There may be other company whose target may be getting access to the premium segment, right. They are happy with lower volumes, but the margin over the sales margin should be higher. So, the budget for these two types of companies cannot be same, right. So, these two companies should be prepare the budget keeping in mind that what is the target of. Okay. Now, so the entire budgeting exercise, it should be in sync with the business policy of the firm. So, business policy of the firm, it differs from company to company. So, there may be some businesses who are looking for playing on volume, right. They may look for larger market share, they are ready to keep lower margin per unit, but they want to gather a higher market share, right, over the time. But there may be another company which may be looking for targeting the premium segment of the market. They want more profit margin per unit of sale, but may not be looking for large market share by volume. So, this budgeting exercise for these two companies will not be same, right, they will be different. So, while preparing the budget, what is the business objective of the company, that should always be kept in mind. Integration with standard costing system. So, you made the budget, right, which is futuristic, which is a plan, then you incurred the actual expenses or you earned the actual income. Now, I need to see that this actual, how it is matching with this budget. Is there any difference, right? Is the difference difference favorable or is it adverse, right? If it is deviating from budget, then how much is the deviation? Is the deviation within the manageable limit or it is something which is beyond the manageable limit? If it is beyond the manageable limit, then I need to further explore that what is the reason for it, right? Why it is deviating so much? Was there a flaw at the planning stage itself, or is there any problem in the execution stage? Now, if there is a problem is in the execution stage, is it something which is unexpected, right? Like for example, during the COVID, everything was shut down for a couple of months. This was completely unexpected, no one expected. So, it was never included in the budget, right, but we can't do much about it. But if it is, if it could be foreseeable, if it could be manageable, or if are we missing out something, right. So, this kind of brainstorming, this thought process has to be explored and to find out. You remember, every budget exercise is a step towards improvement in the future. So, it is a control tool. I am preparing the plan, I am actually executing, I am comparing the both, I am trying to find out that where is the flaw, what are the weak links, and then ultimately next time, right, I will remove these flaws and try to do better. So, that is the target, and it should continue year after year, quarter after quarter, month after month, right. Okay. Inspirational approach. So, now those who perform better than the budgeted estimates, of course, it is a great inspiration for them. Those who are for the time being maybe falling short of expectation, next time they can try, they can do an introspection and try to do better in the next time. So, it is a effort which should inspire everyone for do better in future.